Right, in this video, we are going to be talking about market momentum. So, momentum is very important. It's something we use a lot. I'm going to get more into momentum when we hit the Japanese candlestick section of this chapter. But I think for now, I just want to talk about the overall market momentum, which is a very useful thing for actually gauging how strong a market is and just as an additional confluence on, whether a trade is going to be a buy or sell. So, momentum refers to how fast, how strong a market is moving in one direction. For example, here we have long momentum, strong momentum to the downside. Okay, we have that numerous times where we can see these fast fall offs in the market. Another area with fast downside momentum is this selling point here, which drags us all the way down from 1950 to 1850, a very big decline. So, how we actually use this market momentum and how this market momentum helps us is by actually viewing how fast a market falls and then seeing how fast it recovers into that level. So, what this actually can tell us is that the selling pressure, or on the flip side, the buying pressure, is stronger than the other. So, what I'm going to do is just show you an example here. We can see from 2015, this key level, okay, if we just scale the market back to here, we'll see that the market fell off very, very quickly, okay? If we just use this measuring tool, from 2015 all the way down into 1870 or so, 1865, it took 5 days and 20 hours. So basically 6 days to fall all the way down here. No, 5 bars, sorry. So it's literally just 20 hours. Okay, sorry about that. 20 hours it took to get from 2015 to 1860. That is a huge decline, right? For price to then recover back into the 2015 level, where we then got a reaction, it actually took 6 days and 8 hours. So it took 20 hours to fall, and then it took 6 days, almost a week, to recover that very same ground. Now that tells us that the selling pressure in this market is much stronger than this buying pressure. Okay, a very fast drop off followed by a very slow sideways recovery that took over 6 times longer than the drop did. Now, if we then view this next drop in the market, you'll see we actually had some quite strong downside momentum just there. Okay, from the 1990 point, the market dropped off very quickly and achieved the 1925 level in just 4 hours, or 4 hours, right? Straight down from there to there. Okay, so essentially just one bar of movement. Bam, we went down 4 hours, 4 to 8 hours down into that level. And then if we look at the recovery from that level, it took 12 days. So it took so much longer for the price to recover than it did for the price to drop off. Now that shows us that the selling pressure in this market is much stronger than the buying pressure. And this is just a nice additional confluence for, gauging, right, which direction should we buy or sell the market in. Now, when we get these continued drop-offs like this that happen very fast and then slow recoveries following them, for example, here we've dropped from 1970, mostly through this 1950 level here. We dropped from 1950 to 1850 very, very quickly. Okay. So 2 days, 20 hours, we were at the 1850 level. Now, the recovery, if we look at the recovery, and we are still in the recovery now, it has been an entire month that the price has been trading from this level, and we still have not recovered all of the lost ground. Now, what that tells me is that in this market, the selling pressure here is considerably stronger than the buying pressure. Okay. It's taken 2 days to fall off and a whole month to attempt to recover, and we're still not done. Now, what does this do? It tells me that the sellers are stronger and more prominent than the buyers in this market. Seeing this sideways bullish momentum followed by and following this huge downside momentum tells me that this is a market to sell through rather than a market to buy through. So I will be looking to sell gold, okay? And that's just a nice little additional confluence that I thought would be interesting to show you, and something that can be very useful. Now, momentum is more so used on individual candlesticks, right? We're going to talk about using momentum breakouts, using momentum to actually gauge trend reversals and entry points. But the overall momentum of the market can be very useful as well, like this, to actually see, right, who's stronger right now in the market, the sellers or the buyers? And when you see huge downside moves followed by very slow recoveries, that's going to tell you the sellers are stronger. And on the flip side, if you were to see huge bullish moves and very slow downfall, very small sideways weakness to retake that gained ground, then that is going to tell you that this market is most likely a buying market. Sorry. Okay. So market momentum, nice and simple. Not something you need to massively worry about, but definitely a very, very useful additional confluence for your trades, just to help you focus on, right, is this market stronger on the selling side or the buying side? So hopefully that's been useful. Hopefully everything's coming together now on the market flow side. Now, it is worth mentioning the market flow section is targeted at working out the overall direction of a market, okay? From here, we will be moving into candlesticks and processes, etc., etc., etc. But for now, we are looking through the big things that we use to gauge the market direction. So let's just checklist it. Market structure, key levels, supply and demand, liquidity, and now market momentum have all been covered. And in the next video, we are going to talk about something that pairs the market momentum, the liquidity, and the supply and demand all together to find entry points and trading ranges. So this is going to get quite exciting. One of the final points in this market flow section to bring it all together. And then we will move into the theory of accumulation and distribution, as mentioned earlier. And then we'll conclude this chapter and move on. So I do hope you're enjoying the course so far. Hope you're enjoying this section so far. And I hope you're finding real value and seeing a new perspective to the market.